in YouTube land. Oh, you curious cats in YouTube land. And it is Pride Month, so you might be curious. But anyway. Anyway, welcome to Algo Factory Live Lab. Over here is the free session. So from 8:30 in the morning till about 9 a.m., we do this for free. You can see the inner workings a little glint, just scratching the surface of what we do here. We are the only trading room on planet Earth that teaches you not just how to trade, but how to build an algorithm that could trade for you. And we're the only one in the world that has a professional coder that'll code it directly into whatever platform you're utilizing. So algofactory.tech, if you're thinking about joining, don't think, just do it. Do it. Do it. Do it. Join us, join Cowboy and myself as we take you on this journey. So buckle up, grab your seatbelts, hit the link on the bottom, sign up today. Cowboy, flash that QR on the screen, that QR code, and let's get into it.
QR code, baby. There it is, right there. $49.99, incredibly cheap. That's I always say this, but the closest service, the service that has the closest description to ours, the 2 or 3 that I know of, are like 6 times the price. So, we're doing this temporarily. This is a promotional price. This is not going to stay that way. And anybody who does get this price and stays with us and doesn't let their membership lapse gets to have that price grandfathered in for this tier of service. So while everybody else might be paying, 1, 2, well, not 1, but 2, 3, whatever times that, you won't. So come join us. I'm also going to throw and that, of course, this QR code. You can use your phone, take a picture of that, and it'll take you over to the website. Also on the chat, I'll go ahead and type in tech. Type in the URL. Also put it up on the screen there for you, so you can always come visit us over at www.algofactory.tech. Our entire service and what we do is all described on there. Also, if you have any questions, feel free to go to contact us. Fire us off an email, and we will have somebody explain to you and answer any questions that you have within reason. You can ask us what the meaning to life is. I don't know. I'm going to have that for you.
I will tell you the meaning of life. I've been to the Himalayas, and I've talked to the Dalai Lama. Yeah, I will tell you.
Was it like a llama that was in like the size of a doll? So it was a dolly?
No. It was a llama whose name was Dolly.
I've actually been to the Himalayas.
Beautiful
place. I didn't hike like up in Everest, but I hiked.
Did you go to Mount Everest?
No, I didn't really.
Okay, then you haven't been anywhere. Okay, I don't want to hear it.
It was foothills. Okay.
I don't care the foothills, man.
I put my foot up here. Never mind.
What?
But yeah, so that was actually that's one of the best trips I've taken was going to Nepal. For that
I had a better tip. I was taking this mushroom DMT thing, and I went on a trip, my friend. I don't know where I went.
Yeah.
But I saw it all. That's how I tell you the meaning of life. Anyway, let's start talking about the tradings.
Well, last night at about, I can tell you at exactly what time it was, 12:48 a.m. my time, so that would be 2:48 a.m. EST. That's about 48 minutes after the London Open. In our private group, I posted a trade that I got into. I got into a Head and Shoulders trade. Let me blow this up on the screen, make it a little easier for everybody to see. This is prior to some economic data. Well, not data per se, but this is prior to Jerome Powell talking today. So it is a, what do you call it? Did not want that. This was a bit of a risky move because it's before the Head and Shoulders actually happened, number one, before the neckline was met, and number two, before Jerome Powell talks. So when Powell talks, that can move price around quite a bit. So all my stuff just got completely. How do I undo this? I need to undo everything. I lost all my my custom stuff here.
Oh my god.
Oh, there it is. Okay. Ha! Anyway, so now the neckline is hit, and price has gone down. So this is a head and shoulders trade, and I got into it early because my algo said that I could. Most people trading in neck and head and shoulders. So it's this formation right here. You have price trying to rally up, and then it gets rejected, and then it rallies up higher, and it gets rejected, and then it tries to rally up again, but the bulls are so tired that it gets rejected. And what that means is when the bulls have tried to rally this many times and have gotten rejected in this fashion, it means that the bulls are going to have to take a break. And when they do, there are certain metrics that take place, and we teach those in our actual algofactory.tech over at the website. If you go over there, we do teach how we trade this, and it's a pretty standard. I mean, head and shoulders is a real standard, chart pattern, if you will, right? This is not the hugest secret, but we do have some specific ways that we treat it. And we can share that here today because it's pretty basic. We're not going to share all of it, but just a one key piece is a way to enter this trade. Is that I'm going to zoom in here, and what I'll do is there's a lot of noise in the screen. I'm going to illustrate this off to the right. Okay, so the head and shoulders pattern is going to look something like this, right? And the neckline is that line across the bottom. It's that dotted line you see. Okay, and it doesn't have to be like completely horizontal. It can be slanted, although it's always better if it's slanted up instead of slanted down, because the way that the targets work, the targets are based on the distance from the head to the neckline, and that neckline again is that bottom dotted line. So if it's slanted down, by the time you break out, you're eating into your profit. But if it's slanted up, you have more room towards the profit. Okay, so now I'm not going to get into the details on how we determine the targets, because that's something you can come and join us, and we'll show you how we do that. Quite frankly, you could probably find out how to do that elsewhere. It's not a very secret thing, but again, it's just a service that we provide elsewhere. So the point, though, is that this head and shoulders did have a slightly negative slope. The neckline is sloped down, but it was such a high head and shoulders. The head was up so high that the targets go pretty deep, and I still had a room for profit. Now, here's the thing about it. You'll notice that my entry in the head and shoulders was before the price touched the neckline. So back to our drawing, right? The way that this works is, let me grab my path here. Price heads up, heads, we'll just follow this thing. Price goes like this, like so, and price goes like so, money printing. Well, most people will enter right as price hits that neckline. Most people will take their trade. Some people will wait for price to head down a bit, and then usually there's a pullback. And then as the pullback happens, that neckline gets retested. And then price heads down after that, down to the targets. Okay. So the way that works from a price action and structural standpoint, okay, is that you have structure that was built on these pivot points. So you have, let's get the arrows out here. You have this pivot point and you have that pivot point. And that creates a structure where price was going down and then it headed up. We've talked about this before, pivot points. So that structure, once violated, that's still going to exist. It was a support. Price was bouncing off of it. So that was a support, right? But once price goes below that, it is still there, but it becomes a resistance, which is the opposite of a support. So a support is when price is headed down into structure. For example, let's say this is your structure right here, right? And if price is headed down into structure, and that's a support because it's supporting the price is likely to bounce right off here. But if price is headed up into structure, then this is going to be called the resistance because price is headed up. Now, there are some other ways of talking about this. This is nomenclature that, let's say it's nomenclature that I will choose to use just for educational purposes. But and just a quick reminder, nothing we say on here is investment advice. It's all for educational purposes, and consult your licensed investment advisor before risking your money on the markets, because you can lose money. But the point here is that in this case, if price were to have a support and then price goes and breaks that support and that structure is violated, now that support tends to become a resistance, and price very often will want to retest. It'll head up, grab some liquidity, and head down. It's a very, very common way for price to act. So the conservative trader, when trading head and shoulders, may look for price to break below the structure that's created by this neckline and come back up to retest. And when that happens, one way to enter is you can enter a short after the price after you have whatever your algorithm says that tells you can enter, which probably will happen right about there. And then you can have like your stop loss, whatever it is, 1 ATR above the structure, perhaps, whatever your algo says you can do, whatever your method is. And then of course you have your targets, which if you want to know how those targets are calculated and determined, head on over to www.algofactory.tech and we will go ahead and show you how that's done. You can get there by taking a picture of that QR code right there as well. It'll help you get in there. So on to the lesson, back to the lesson at hand. So what happened here though is I went ahead and my algo was, it gave me a lot of confidence to enter a little bit early before the neckline. Because if you have a shoulder that's formed and you can enter after that shoulder, it's a risky trade because you have this structure. You're literally trading against structure. But I do have an algorithm that does give me permission to do that, right? I've tested it. I know that there's a level of success and the targets are going to be the same. So it's just a higher entry. So I can enter, I'll put my stop loss above the shoulder for the moment. And then, you can have a nice entry right there. And then as price goes down and breaks that neckline and does this, you can move, or at least I can and do, move my stop loss all the way into profit to where my stop loss will now be where the stop loss would be if I had entered this way, and it's in a profit permanently, and then I can enter another trade as well. And then of course my stops tend to be a bit tighter than most because I have a way of doing that because I've tested it and I have the numbers that tell me I can do this kind of stop loss here, right? So that being said, this is a double entry. And the actual trade is right here. You can see it. So as the right shoulder formed and I got a ping, I don't like to use the word confirmation in trading, but I got a ping from my algorithm. I went ahead and entered right there. Now price is broken below. I have a choice of entering at market, and I do have a way of determining a stop loss with an entry at market. However, I think I'm going to at least hold off until another hour and 15 minutes passes by, or at least that, because economically on the calendar, we'll take a look at that really quick. Today is Wednesday, June 21st, and Fed, I like to call him Fed Chair Powell. I just sometimes I don't know, his name is Chair Powell, so I call him Chowell. And Chowell's going to have a conversation. What's that?
Kind of like Benifer.
Benifer, yes, Fed Chowell.
Or like us, we're like Cowrilla.
Gorilla boy.
Gorilla, that's a mouthful.
That's a mouthful. That's what she said. So Fed Chowell is going to testify. Now I don't know how long that goes for. Let's see here if it says on the details here. 90 minutes.
He's going to testify.
So the source released testimony text 90 minutes earlier than scheduled. Interesting. I wonder if that information is already out. Let's see. Powell semi-annual monetary policy report in Congress 14 minutes ago. Let's look at the news, right? So this website is forexfactory.com, and I'll throw that up for the YouTube members here. Okay, so this is a great resource. I put it in the chat. Okay, and you can take a look right there. I'll throw it up on the screen really quick. And there is a calendar in there, and on that calendar it gives you all these events, right? And so I use these events mostly to avoid trading news, or at least avoid being in a day trade prior to news. If I'm in a swing trade before the news, I'm happy with that. And for the beginners, a swing trade is going to be a trade that is intraday, if that's I don't usually hear that term being used, but it's a trade that is longer than 24 hours, like longer than a trading session. So a day trade, it generally happens for somebody in the U.S. trading the New York session. A day trade is generally entered after market open, after 9:30 EST, and then the trade is over by the market close, which I believe is 4 EST. Okay, 4 p.m. EST, and you're in and out within the session. That's a day trade. A swing trade means that you might be in for 24 or more hours. It might even go up to like a week. Swing trading, I've seen different definitions. Some people say up to a couple of weeks. But long story short, a swing trade is on a higher time frame. So your stop losses are a bit wider than a day trade, generally. And that means that even a news event, unless it's really monumental, a news event's probably not going to knock you out of a trade. So I feel okay being in a well-established swing trade prior to a news event. But if a news event is happening, like in the next hour or two, or even 3 or 4, I'm not going to enter a trade. But this happened at the beginning of the London session, so I went ahead and entered it, not a problem. But so the thing to know though is right after the news event, right, there tends to be a lot of volatility, and that volatility can be used, but you really have to study how that's done. I tend to wait for the whipsaw. I'll wait to see a whipsaw, and a whipsaw I will illustrate for you. See if I can find like an example of a news event. You look on the calendar, see the last time that Chowell had his conversation. Let's see, the 14th I think was the FOMC. Yeah, so let's go back to the 14th of the calendar. We'll see if, yeah, okay, so here's a whipsaw. All right, it's a 3-hour chart. So let me go ahead and go to a lower time frame on this. And this is a conversation that we've had on this YouTube, this beginner live lab before. So anybody who's been tuning in for a little while, this shouldn't be, this should be territory that is familiar. However, so this big candle headed up there, that was the FOMC, right? And so the FOMC came out, inflation came out lower than expected overall, or at least the whatever they had the skip or whatever it was, right? A lot of the data came through such that prices went up against the dollar. And when that happened, a lot of people were like, go long. And this is the 5-minute chart, what we're looking at here. So each of these candlesticks is 5 minutes worth of price action. And there's this hard move up, and a lot of people thought they're going to get rich, and so they went long. And a lot of them piled in and went long way up here, right? So they went long way up there, thinking that it's the skip, the interest rate didn't change and all this. They didn't pay attention, and then price went ahead and took them out, right? So price went ahead and took those longs out. Now, what that is that is a whipsaw where you have a reaction to news, and then price comes right back down to where it was before. That's the whipsaw. Okay, so I tend to look for crazy price action like this to regulate. Another way to do it is to use the ADX. And so, well, I'm not going to get into that. That's more for my my advanced class. If anybody over in the our private group wants to know how I use the ADX and to kind of identify when a whipsaw is passed, ask me about it during the session, and we'll discuss that. All right, so that's just an indicator. For those out there in YouTube land who are extremely astute, you have a clue. So anyhow, in this case, though, back to today's situation, I have a trade that's nicely in profit. And let's see, this is the 30-minute chart. Well, we'll go to the 3-hour. That's where we were looking. But there's a decent chance, even with or without Chowl, there's a decent chance that price is going to fool around in this area, maybe even jump up a little bit. So and it's impossible to know. This is not like a high probability forecast. Like, things could happen in two different ways. So I'm just going to mark out those two different ways. So price could, when Chowl talks in an hour, price can hang out here and then go back up and then head down, right? That's one option that could happen. Or price could actually head down and maybe touch a target and then head back up. So now if price touched a target like that, I have a take profit right at this level. Okay. These are alerts, these little clocks you see on the screen. There's one alert for price to touch the neckline. There's another alert for me to potentially move my stop into permanent profit right here. This is actually where I would take profit the first time, and this is where I'd take profit the second time. And again, I know we're not talking about how I determine targets, but for anybody who is astute over in YouTube land, what's on the screen is pretty much telling you how I'm taking profit. So the clues are right there. If you have questions over in the private chat, we can talk about that during the private session, which starts in about 8 minutes. But either way, I'm not going to move my stops. I'm not going to change anything, or do my add to entry until after Chowl is done talking. And because I could right now, I could add a position right now if I wanted to be aggressive. I've already been aggressive. I've entered well before most people ever would, but I have an algo that allows me to do that. And then I could enter at the neckline right there. I could do an entry right there, have the same targets, and I could use some math to determine my stops. Again, those in the private group understand how I determine a stop loss at a market entry. There's a methodology to that, and if you don't remember, ask me and I'll show you. And then of course I could wait for the price to come down and head back up. But none of those decisions will be made until Chowl is done. So we're pretty much near the end of our of the YouTube part of the deal. So of the free beginner class, and I'll throw that QR code up one more time. So if anybody likes what they've seen here, first of all, hit that like button, give us some love in the algos. But second of all, here's a QR code. Scan that with your phone, and you will be able to head to our website and come check out what we do. If you have questions about what we do before you sign up, just go ahead and email us. There's a contact us right there. And if just in case you are not into QR codes, I will go ahead and throw our website back up on here. And there it is, www.algofactory.tech. V, give us that gorilla send off. Let's get out of YouTube.
Yeah, absolutely. Listen, folks, if you're dilly-dallying, you're sitting on the fence, don't be a fence sitter. Be a winner. Don't dream. Make it happen. Join algofactory.tech and let us show you how you can become profitable and create an additional income stream that could radically change your life. And with that being said, Cowboy, let's go. Let's get into the lab.
Yeah, we got we're gonna leave right now, but we had VM in there chatting with us. That's Valley Girl's with us all the time. It's either Valley Girl or Valentine. I can't remember which one, but she's chatting with us in the YouTuber. But I wanted to give a shout out because we just haven't been responding to any of it. We love having people talking there. So, but yeah, come talk to us. By the way, we're out of here now. But if you